Hey everyone, Brian from Bear Bull Traders here, Sunday, March 29th, wrapping up the end of the quarter here, and it's been pretty ugly for 401ks and investment accounts for sure. So I just wanted to kick things off here because, we had the week pretty nice rally after that really harsh sell-off, and I just wanted to kind of highlight possibly where we are right now in these phases of bear markets. So this is a chart I pulled up from Real Investment Advice, borrowing this chart from them, and there was a number of charts that showed the similar stuff on various websites as well. But you see here, here's our trajectory right now, and I think was posted a couple days ago. So obviously we've had this nice little bounce here, so we've come up. But if you compare that to the 2003 bear market, 2008, 2009, both of these you can see here, and this is what I'm trying to illustrate is this phase two where people we get the initial sell-off and then we get a rally and then the selling resumes, and in this case obviously 2002 to 2003 kept heading lower, and same with 2008, 2009, we just kept heading lower as well. So I wouldn't be surprised if we did head lower. We've had our nice little bounce. There may be a little bit more juice in the tank here, although futures are indicating we are heading lower in the morning, but we'll see how that all works out. We've still got probably more than 12 hours for things to happen uh, before we open here, so we'll see what happens. But again, I'm kind of expecting a retest at the very least. And we've in these periods we were never in zero interest rates. They were obviously had some similarities, but also some differences. And so who knows where we're going to end up? But I am expecting another pullback here. And people have been asking, when is it time to jump in? And probably it's going to be hard to pick a bottom. I mean, we're not going to know where the bottom is until the bottom's put in. It's going to be a look in the rearview mirror event. So if you're looking to buy some value, pick up some stocks for the long term. I don't recommend you going all in, and that's just my opinion. But peace in there. And let's take a look here. FinViz, again, we had a nice day, but it ended pretty harshly. I'm not sure if there was some news there, but there was definitely some selling into the close. People didn't want to hold through the weekends, obviously, and it just accelerated that last into that last hour. And yeah, take a quick look at the groups, see what worked, what didn't. You can see here their safety trade utilities could be an area of, although everything did get sold off. I mean, when we had that big sell-off, everybody was just getting liquid. There might have been some margin calls, and when you see a sell-off of that magnitude, people just sell everything. It doesn't really matter whether it's good value, bad value. They just press in the sell button and they don't care. So you can see here we had a nice bounce back on the week, and utilities led the way with the safety trade. But on the performance on the month, healthcare is down the worst. I don't know. I guess maybe with the virus thing, healthcare stocks thinking may do well. So let's take a quick look at the indexes. You can see here we did put in a double bottom on this bounce back, came right back up to this 20 moving average and rejected it. So moving averages are probably going to be areas where we're going to be either getting support or resistance, mostly resistance in this case, because everything's trading down. Be watching for crosses, like here's the 50 crossed over the 200. That's not usually a good sign, usually a sign you're in a bear market. And yeah, so volume was pretty light on this sell-off on Friday, which is encouraging, I guess. something good to take away there. The 10-year looks like, again, we're going to maybe head lower here. It's just been super volatile. You can see even this is volatile back in this area with the interest rates, but this is just insanity. It's crazy, and it's probably going to stay that way for a while. So you can see here, yeah, we just pretty wide range during the week. So the Dow, we'll just skip to the weeklies here, and on a weekly chart, this is our SARS actually. Again, I'll just use this as an illustration of, getting this harsh sell-off, which we got a bounce, and this is the bounce on the SARS, and you can see here what happened next, sold off, and then we had another leg lower when we just couldn't get back above this level here. So another illustration of potentially where we're going. And I'm not going to say we're going to go there because, like I said, the Fed is I don't think they've ever been more in supporting a stock market, and we've never had, interest rates certainly weren't at zero when this all happened. So, it's the same and it's different. And here's the weekly. So you can see here, pretty nice engulfing candle if you don't include, well, if you include the tails too. Yeah, nice engulfing candle. You would have thought we might get a follow through this week. Who knows? We may get in more of a bounce. IWM, here we put in some nice bottoming action on the IWM, and now it's coming back. Came back up, had a bad day on Friday, but not as high volume. Again, didn't get up to this moving average. But just reminding everyone, the strongest market rallies will often happen in a bear market, and we're definitely this is definitely a bear market. Quite often inexperienced traders thinking the bottom is in will buy into these rallies, and just basically to be disappointed. Let's just say that. So the Qs, again, volume dropping off here, and we had a bit of a down day. We'll see where we open tomorrow, but again, this 20 moving average acting as resistance. So if we can get back up through there, the next level will be the 200. That will be, which is close to 200 on the Qs. So that would be a significant area that you'd probably see some resistance as well, and that would mark also this high, which is 192.72. The Qs, again, nice bounce on Friday. SPX, more of a V reversal than anything. So you can see here inside day on Friday, lower volume, but again, I think we may be heading back down here. We'll see how the market opens. Weekly, again, nice engulfing candle. You'd think that would be a positive, but not after this kind of technical damage has been done. And you can see here we actually bounced off this 200-day moving average, went up and tagged it. And the dollar's just gotten smoked. I guess with all the talk about all the QE, or not QE, but all the financial support and the money, money that's flowing into the system from the Fed. I'm thinking that, and with interest rates dropping to zero, then they have these trades on where you move money around into markets that are that have interest rates that are paying an interest rate to, and so I guess maybe some of that money left the market when the U.S. dropped their interest rates as well. That's what I'm guessing. And the VIX hanging in there. We're well off the highs, which was up around 85. It's here, 85, and again, really sold off and came right back up. So kind of interesting price action there. I'm guessing we're going to chop along here. The VIX is something you really need to watch now, because as the volatility decreases, as the ATR on the various indexes drops, VIX will also drop, and we should see some a little less volatility in the market, and that will be an indication possibly that there could be some buying opportunities starting to leg in a little bit here, little bits at a time. Let's take a look at what we got on watch. You should be building a watch list. You should be building a list of stocks that you want to own for the long term. If you want to put some money to work and not worry about it for a couple of years. I do like this ETF KWEB. It's Chinese internets, so you get a combination of various internet stocks, including Baba and JD and VIPS, a bunch of them. So that's definitely one way to play it, rather than trying to buy little bits of Baba or whatever. So this could be a decent play if it maybe comes back down to 41, 40. That would be a decent maybe a decent entry there. I still like MU in the long term. Chip prices have been firming up and really actually going higher from what I've read, and so that should bode well for the chip makers like NVIDIA, MU, AMD. And if we're going to be spending more time indoors, probably more computing, more FaceTime, more Zoom conferencing. There's just going to be more of a demand for electronics and chips. So I think that this in the long run would be good. It's come down from a high of 60. So if we get another pullback here, might be a decent entry. Gap fill would be great. Again, you could get a gap fill and then it could go lower, but you have to be prepared for that inevitability if you're going to be in it for the long run. That's that's what you've got to do, because you're never gonna pick that perfect bottom. Nobody's gonna know exactly when it's going to be in. And this is oil. Oil, I think, is trading down in the pre-markets now. It's back down. It's getting, from what I saw, it was pretty close to 20. The only thing that I would be concerned about in shorting oil is, how much pain is Saudi and the Russians willing to take on this. I mean, the oil prices, it can't be great, what they're getting in terms of the dollar value for the sale of their oil right now, and both Saudi and Russia are needing the money on a national level. Probably Saudi more than Russia, from what I understand, but you have to think that maybe at some point somebody's going to blink and they're going to call a bit of a truce, and I'm sure oil is pretty heavily shorted. So if that ever happens, if you ever see that in the news, I think that would be a great opportunity to jump in on, not on this unless you can short it, but a USO or something like that, for a rip your face off rally in oil, if we do get a sort of some kind of indication that Saudi or Russia are going to maybe step back from the cliff, the edge of the cliff. This was one I was looking at race. I really got a lot of FOMO on that one, because that was 130 to 155. I really thought this was a good trade. We may get a pullback on that, and again, I think that might be a decent entry to get in on. I don't think that the demand for high-end sports cars is going to be any less in our current environment. The ultra rich are always going to be ultra rich. Yeah, I still like race. And here's SMH, again, semiconductor index. Again, something that could be good for, and this is an ETF, and if you didn't want to play individual names, that would be a good one. Space, if we get a pullback on space here, I think this again could be interesting. This 200-day moving average might be a good entry. You know, set up an alert if it gets there. Buy a little bit. STGN. These are the tankers. This is where all the oil is going right now. It's all going into storage because the demand has just been, you know, already dropping because of all the initiatives for clean energy, and now you get this downturn in global economic activity, which is, you know, now you're from one woodshed to the next. So. But this is where all the oil is going right now. It's just going into tankers, and or some of it anyway. Floating storage. You know, it looks like this might actually break out. If we can break out above 20, might set a you know, an alert. If we keep an eye on that one, it actually was up on a down day. So if we get some follow through in that, what was the high of the day here? 1950. And this high is 2050. So yeah, and here's 21. So it could be an interesting trade. And there's your moving average down there at 1690. Call it 17. Team's been strong. You know, it really didn't. It sold off a lot, but it really came back. This was another stock that looks pretty positive on a price. If we get a pullback on it, it looks strong. Always look for anomalies in a bear market like this, and that's definitely one. Again, if you really want to supersize your gains, you can you know, these ETFs, these beta ETFs. If we can get another leg up, a 3-time beta ETF will get you there faster. And here's a 3-time or a 2-time VIX. This VIX went, you know, skyrocketed high of $1,000. It did touch 1,000. Unbelievable. And I bought it back here at under 50 and sold it at around 60, and I was pretty happy. Trying to stay happy, if you know what I mean. Anyway, never saw that coming, as they say. And here's the USO again. This is the kind of thing you could trade if you get a headline that says Russia and Saudi get back together at the table and discuss some kind of pricing relief for oil. And I'm sure this will rip, as well as all the energy stocks. And Zoom has been great, hasn't it? Just this is the coronavirus trade. This has just been since we got into that coronavirus. Everybody's using Zoom. Friend of mine's using Zoom that for their choir practices. It's you know, kids are using Zoom to play games on. It's just it's really taken off. So yeah, looks like it's going to continue to be strong here. That's it, everybody. I'm sure Zed is the end of this. So, hope everyone has had a... This is my book on Amazon, How to Swing Trade. If you haven't checked it out already, it's in the Amazon store. And we will be all in the Bear Bull Trading Room, as usual, Monday morning. 8:30 pre-market show starts, and then it'll be off to the races when the market opens, and we'll just see where things end up there. I have a few positions that are short the market right now, and hoping the futures stay down, and that's where it sits right now. So we'll see everyone in the morning. If you're going to join us there, we're on Facebook on Facebook live feed, and that's it. So have a good rest of the evening, everybody. And we'll see you in the morning. Bye for now.